One, and there we go. We are streaming live. Woohoo! Yay! All right, everyone, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, taking you along for the ride for that safe, predictable, consistent 1% per week, because that's what I'm looking for. Now, I'm retired. I have no desire whatsoever to go back to work. So, in order for me not to go back to work, my little nest egg has got to give me enough money on a weekly basis to pay my bills. T-Dub, what's happening? Nice. All these people showing up on a Saturday night. Pakaris, hey James, someone took my Nike shares yesterday. Now I'm sad. I was liking those premiums. Hey, Pakaris, you can always buy them again on Monday, dude. That's one of the nice things about it. You find a good company, and you can buy them over and over and over again. Let's take a look at Nike. That will be the first one on our list. Now, let's take a gander. The Mortgage King is here. Oh my goodness, the Mortgage King is here. We all got to stop and pay homage to the Mortgage King. Hell, praise the Mortgage King. Anyway, let's go. Pakaris, let's take a look at Nike. Now, we all know that I like dividend stocks. Nike is just one of them. Hey, Hakuna is here from Sweden. So, that being said, Nike, last bid, the ask, $73.98. So we all know if we're going to do the $73.98, it is going for $117. So here's the thing, Pakaris, someone took them away from you last Friday or yesterday, so let's buy them again on Monday. Let's check out the numbers. The numbers, there you go, right there. $73.98. That's what we can buy them for first thing Monday morning. What are your thoughts on index funds versus Roth IRA? Oh, I have no idea who asked that question because there's no name there. So I can't call you by your first name, so I'm going to call you SpongeBob. Anyway, so SpongeBob, what's my thoughts on index funds as opposed to a Roth IRA? Well, the Roth IRA has to have something in it. So what are you putting in your Roth IRA? You could put index funds into your Roth IRA. Now, an index fund, I'm going to say no, only because I like a consistent, predictable, safe 1% per week. And can I get that with an index fund? No, I can't. Now, before I can give you my opinion on index funds, you have to let me know which ones you're looking at. Thoughts on cutting losses? Jerry Beard, okay, Jerry, every once in a while I do take a loss. Don't like it. As a matter of fact, in one of my other trading accounts, I took a bunch of losses on Friday. Now, I haven't taken any losses purposely on this account here, the ones I'm sharing with you guys. But I do have 6 different accounts, and I do have different trading strategies in those other accounts. So there are different rules with different trading strategies. I don't want to go into any of the other ones here, because here I consider this as let's call it a stepping stone, a beginning, a level playing field. So if I continuously teach the exact same thing to everybody that comes here, everybody's starting off the same level. That's why I don't deviate from the strategy. Okay, the strategy was consistently producing a safe return. So why are the top 5 stocks, or what are the top 5 stocks on my watch list? Intel cut its dividends out, so that's a big no. Well, Terry, yes and no. I do cut slack on some stocks, and it really depends on what company it is and what is the reasoning behind it. Okay, 3M is still on my list, even though 3M has cut its dividends. Okay, Apple is on my list, even though Apple doesn't have 20 years of increased dividends. Not looking at the 401k, I don't think. All right, SpongeBob, I'm not 100% sure. Now, you asked me my opinion between index funds and a Roth IRA. I have no idea what is in your Roth IRA, and I have no idea which index fund you're talking about. Doc, look up in the sky. It's a bird, it's a plane, it's Super James. That's funny, Doc. All right, so Manny, how are you doing over there in Instagram world? Manny, where are you calling in from? Or were you tuning in from? Well, All right, so let's continue looking at Nike for Picaris. Picaris wants to take a look at Nike today. Now, I have no problems with Nike whatsoever. They had this big drop over here a couple of weeks ago. Okay, as soon as that drop hit, yeah, I jumped in and I bought some because you're going to make the most money when you're investing and when you're buying at a bottom. Now, Nike hasn't been this low for a whole year. So you have to ask yourself a question. El Paso, Texas. Cool beans. Now, I'm not much on politics, but I am kind of curious how things going over in Texas, considering that Texas said screw you to the federal government, and now they're going to start exporting illegal aliens because the Supreme Court said that Texas doesn't have to abide by the federal rules because Texas is their own state and they can do whatever. But no politics. But I find that rather interesting. You know, the governor said, no, we don't want these people coming in through our back door. Anyway, let's get back to Nike. All right, so Nike, first thing Monday morning, I can buy it at $73.98. The closest strike price is going to be the 74. The 74 is selling for 117. That is well over 1%. Now, if you guys have any difficulty, you know what I like about Texas? Texas has vending machines, ammo vending machines. Can you believe that? You want to hear something strange? When I was in France, I'd stop off at drive down the highway. I'd stop off at a rest area. In the rest area, they had vending machines that vended wine. You could actually buy wine in a vending machine, and it was cheaper than water. You can buy water, or you can buy wine. Okay, all right. OMY ripoff. Michael Adam. I'm kind of saying what's ripoff about. Okay, we're talking about the vending machines with ammo. Chevron moving their main offices to Texas. Cool beans. That's awesome. All right. So we're looking at Nike. Now, Nike, Monday, I can buy it at $73.98. Because you get the bid, the ask, the high, the low, all that kind of stuff. That's up here at the top. Down here is going to be the option chain. Now, for those you don't know, I do sell options against dividend stocks. I like quality dividend stocks. Swimmer Dude. Where does one get the 20 plus dividend list without paying for them? Ooh, Swimmer Dude, you don't like this one. Yeah, the whole financial system, Adam, I'm going to agree with you. Okay, I don't like it. However, what I'm doing here is I'm buying assets. Can you look at BA? We're going to look at BA in a second, but right now I want to answer Swimmer Dude's question before we go on to Nike. Swimmer Dude, where are you going to get the list of companies that consistently increase their dividends for 20 years or more? Hope you got a pen and paper ready. Here we go. You ready? Google. That's it. You're going to get the list on Google. You're going to go into the search bar, Google, or you can use Bing, or you can use Alta Vista, or whatever search engine you want to use. You're going to put in the search engine, Dividend Kings List 2024. Okay, that's 54 companies that have increased their dividends for 50 consecutive years or more. That's 5 decades or more. Next, you're going to put in Dividend Aristocrats List 2024. Dividend Champions List 2024. Dividend Contenders List 2024. Warren Buffett's Stock List 2024. By those 5 lists right there, you're going to come up with over 300 companies that have increased their dividends for more than 20 consecutive years. Now, once you take that list and you cross-reference it with the CBOE, which is Chicago Board of Options Exchange, they have a website. They have a website, cboe.com, and you can cross-reference cboe.com with the list Dividend Kings and find out which of the Dividend Kings has weekly options, because I think they all have options. But some are monthly options and some are weekly options. But I do love the Dividend Kings. All right. The entire financial system. Yep, Michael, I'm going to agree with you 100%. Eric, Can we look at BA? Wait for the big crash. Yeah, Michael, I'm going to agree with you and disagree with you all the time, both, and I'm going to tell you that in a second. Just 3,000 of VTSAX. JJ, I have no idea what that is, but we'll take a look at it. Now, Eric, what I'm doing, I do know there's like some kind of a crash or some kind of a major calamity coming soon, but here's how I plan on getting around it, and I hope you guys are going to do the same. I can't tell you what to do. You guys have to figure out what to do for yourselves. The reason why I am buying dividend stocks, hold on a second while I get this camera up and running. Okay. The reasons I'm investing in dividend stocks at this point in time is because a dividend stock, especially the ones that I look at, most of them over 100 years old. So you take a look at Coca-Cola, Pepsi, General Motors, Ford, Wells Fargo, Bank of America, Bristol Myers Squibb, Baxter, U.S. Steel, Wells Fargo. Then there's a whole bunch more. There's a bunch of companies, a lot of them are dividend kings, that have consistently increased their dividends. Now, why am I looking at those? Well, because here's the thing. No matter what happens in the financial market, and we saw it in 2008, and we saw it again in 2020, okay? Shit hits the fan and everybody scrambles. But what happens? Well, we still need toothbrushes, we still need toothpaste, paper towels, toilet paper, windshield wipers, canned foods, bottled water, gas for our vehicles. We still need all these products that these companies develop or these companies produce. So even though, the shit's going to hit the fan and everything's going to go kaplowy or whatever's going to happen, owning a piece of a company, yeah, you're going to own a piece of the company that's consistently, hey, check it out, I got some flowers. Whoa, that's a whole bunch of flowers. Thank you. Holy cow, and they're still going. Neato, 71. What an odd number. 71. Okay, but think of it this way. The United States has seen a lot of crap in the last 100 years. Matter of fact, the whole world has seen a lot of crap in the last 100 years. World War I, World War II, Vietnam, Korea, the wars in the Gulf, Afghanistan, Iraq, Kuwait, all that crap. The Great Depression, the stock market crash, the oil embargo of the 70s, the credit crunch of the 90s, the 80s, the market crash in 87. I don't know if you guys remember that one. The coronavirus thing, what was that, the pandemic? Yeah. And then the financial crash in 08. All that crap that has gone on over the last 100 years. Well, that's a lot of crap, all right? But what do we still need? Well, we still need toilet paper. We still need toothpaste. We still need dish soap. We still need laundry detergent. We still need electricity. We still need gas for our car. We need still oil to lubricate stuff. We still need a lot of products just to function. So yeah, what happens if it collapses? Well, great, it does. Well, big reset. Good, you reset the button. But what happens? Okay, the car companies are still going to be there. Ford is still going to be making companies. You see all the crap Ford has been through for the last 120 years that they've been in business? Okay, a lot of crap. But they're still here. And they're still increasing their dividends to their shareholders. So once you own a portion of the company, so the economy falls apart, great, but you still own a portion of that company. So when things recover and you start, hey, we need toilet paper, we need paper towels, we need this, we need that, well, people got to go somewhere. And if you still own a part of that company, well, you're still going to own a part of that company. Okay? The dollar might be worthless, but you change the worthless dollar into something that actually has some value to it. A portion of a company that's basically not going to go anywhere. Hey, friend, how are you doing? Bubba, what's happening over there in Instagram world? Okay. Terry, I bought some Ford Friday at the dip. Cool beans, Terry. I got a bunch of Ford myself. So, let's finish up with Nike, and then we're going to progress to some other ones. Somebody wanted to take a look at BA, which I believe is Boeing. So, we're going to look at Boeing after we look at Nike. So, as I was saying, Nike at this moment in time, $73.98. Ooh, hot pepper. All right, Mark, thanks. Holy cow. Trying to say I'm a little too cool. I need to spice it up a little bit. Anyway, Nike's at $73.98. The 74s, which is the closest strike price, great. Let's open it up real quick to the calculator and see what kind of a rate of return that would be. So, the 117s, and what is it costing us to get into this position? $73.98 per share. 73.98 per share. That comes to a grand total of 1.58%. Now, Pakaris, you said somebody bought your stocks on last week. Well, you made your profit. Okay? Now, you made your profit last week. Okay, great, fine. You want to jump into Nike again? Be my guest. Well, here's the numbers. Now, I'm not suggesting you do that, and this is not a recommendation. We're going to go over the disclaimers in a little bit. Is there ever a situation where the stock goes from a monthly option to weekly option? You know, to be 100% honest with you, I've never seen it. Okay, to be totally honest with you, I've never seen it, so I don't know if it does or not. Would love to hear your thoughts on SPY. Yeah. Someone recently advised me to invest as an income generator. Marky, I'm going to pause this right here because as soon as we're done with Boeing, I'm going to take a look at SPYI and give you my personal opinion. Now, before we do that, I'm going to do the disclaimers as soon as I'm done with this. I will do the disclaimers, then we'll look at Boeing, and then we'll look at Spider. I'm going to pause all the questions for now, all right, because I get distracted easily, and if I see those questions move, I'm going to stop and read them. So I stopped the questions, so let's see what we're doing. Okay, so Nike, 74, 1.58%. Now, that's more than 1%, so that's a yes for me, but we want to look at the numbers first. Now, before we do that, let me briefly explain to you how this trading strategy came about, because we got 79 people here. Really? On a Saturday night? You guys got to like, comment, subscribe, all that, and share. Share the live. That way we get more people here. Either that, I can reboot and try it again. All right, so here's how it came about. In 2008, I was trading heavily in the stock market. Okay, fine, dandy. My 9-year-old daughter comes up to me and says, Daddy, what are you doing? Can you teach me how to do this? Well, here's the challenge. When you have a 9-year-old little girl, nothing about little girls or little boys, one way or the other. Okay, she wasn't a Mensa student, but here's the thing. At 9 years old, an average ordinary little girl, okay, wasn't in any advanced classes or anything like that, just a normal, everyday girl, okay. To teach her how to trade, the challenge that I had to come up with is it had to be simple, it had to be safe, it had to be predictable, consistent, and here's the big one. You ready? No way that she could lose, because we all know what happens if a little girl or a little boy loses money, especially at 9 years old. They're going to cry, going to make daddy feel like crap, and daddy's going to go, damn it. And then mama's going to get involved, and then I'm laying on the couch for a couple of days. So, no. Simple, safe, predictable, consistent, no way to lose. Okay, that's what I had to come up with, trading strategy. So here it is. Rule number 1. Never buy something you do not want to hold long term. If you don't understand it, if you don't know what they do, if it doesn't make sense, don't buy it. Never buy something you don't want to hold long term. 2, never sell at a loss. It defeats the whole purpose of investing. 3, make sure the company has consistent dividend increases. Now, why the dividend increases? Well, it saves me from reading all the quarterly and annual reports, because a dividend is nothing more than the profits that is shared by the corporation. So if the corporation is profitable, they're going to give us a portion of the profits. And those profits come in the form of a dividend. So if the dividend is increasing every single year, okay, I personally like 20 years, every single year, that means they're consistently profitable. Now I don't have to read all those stupid reports. But why do I care? As long as they're consistently profitable, they're going to share their profits and leave more and more profits to the shareholders. Great, that's what I want to look at. There's about 300 of those companies. Now, actually there's more than that. But once you combine rule number 3 along with rule number 4, which is make sure there's weekly options available, because I want weekly cash flow. My bills come due every month, just like a lot of you. Okay? Okay? And I want weekly options. Now, 9 August, see the number right here? 9 August 24, that's this Friday coming up. 16 August, that's 2 Fridays away. 23 August, that's 3 Fridays away. 30 August, that's 4 Fridays away. Every single Friday I can trade. Unlike this company here, okay? Those are monthlies. 16 August, 20 September, 20 December, 17 January, 21 March. Those are monthlies. That means I can only do it once a month. No, 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 no. Oh, where was I? Oh, crap. Don't get old. He has a tendency to forget shit. Where was I? Nike. NKE. Okay. I like weeklies because I can do it 52 times a year. And if I'm averaging 1% per week, well, that's over 50% per year. Okay. Monthly options do not offer that kind of rate of return. Okay. So I'm just showing you Nike right here. Nike, the 74s are going for 1.5%. Well, great. I like 1.5% because that's way more than 1%, you know? And I like 1% because 1% equals 50% per year. And between you and me, 1% a week allows me to live comfortably without having to go get another job. All right. Now, let's start this again. I'm creating new videos. If the numbers work and it says more than 1%, great. What are we moving on to next? Right? Next, we're going to take a look at the charts. Now, the charts are going to tell a story. They say every picture tells a story. A chart is basically nothing but a picture. Okay, this one here is the 1 year chart. There's 5 things I want to see. You're going to see a lot of 5s. I do things in 5s for some strange reason. I don't know. 5. You ready? Number 1, the high of the year. Number 2, the low. Number 3, where was it? Number 4, where is it? Number 5, what direction is it going? Those are the 5 things I want to see. Well, the 1 year chart looks interesting. I definitely want to take a look at this because this is the last couple of weeks. So, from the 1 year chart, we're going to jump in. We're going to take a look at the 90-day chart. The 90-day chart gives me an idea of what it's done for the last 3 months. Now, the last 3 months is totally different than the last 6 months because 6 months was a different world as last 3 months, which is different than currently. But 90 days gives me an idea of how the stock is moving. Well, it basically channeled to the side. See that? No big ups, no big downs. But right here, she drops down. Okay, some strange reason she drops down. Now we looked at the reason. I think it has something to do with oh my goodness, there's something about the manufacturing and they didn't agree with something. I don't know. Anyway, well, so she drops. Now she's going sideways. All right, well, fine. She's doing the exact same thing, channeling again. Now, that's the last 90 days. Now, when I change it to the last 30 days, this pitch is going to be totally different. But remember, high, low, where was it, where is it, and what direction is it going? That's what I want to look at. Now I'm going to go to the 30 days, and it's going to change totally. 30 days ago was the 3rd. Right there, there's the 3rd. Ready? See? Totally different. But it's always the same. High, low, where was it, where is it, what direction is it going? This one's pretty easy to see. Okay, 30 days ago, 30 days ago was a high at 76.09. She drops down, goes back up, drops down, goes back up, drops down, goes back up, drops down, goes back up. Now, right here, that's Wednesday, Thursday, Friday, she's coming back down again. Okay, so how far down is it going to come? Well, I don't know. But I have a good idea because our 30-day top is way over here at 76.09. And our 30-day bottom is right here at 70.89. So that's about a $6 move. Well, $6 move on a $7 stock is just a little bit below 10%. Okay, so from the 30-day high to the 30-day bottom, dropped about 10%. Okay, great. Now, she shoots back up, 75.50, pulls back. Hypothetically, looking at the way the chart is going, remember, they're like a teeter-totter or a seesaw, whatever you want to call them, teeter-totter, seesaw, you know, up, down, up, down. That's what they do. They go up, they go down, they go up, they go down, up, down, up, down. That's all they do, okay? So, that being said, it looks as if it should be coming back down. It'll probably go somewhere around 72, 71 before it turns around and goes back up again. So, I would be, now, I already own some Nike, But here's the thing. I would like to be looking at, is it on my list here? I write things down. I'm actually that old school. I don't do the computer crap. I actually write stuff down. Many a times have I had computers die, hit the wrong button, and all the information just erased. Yeah, so, sorry. I'm going to write it down. Because if electricity goes out, guess what? You're screwed. Me? Not so much. Nike. I'm writing Nike down because I want to find out where that bottom is. What do I mean by that? Well, this is where we are right now. 73.98. Okay? This baby's going to come down a little bit more, and as soon as it reaches a new bottom, it may be a new 30-day bottom, but it'll be a new bottom coming down from here, and then stop, turn around and go back up again. That's where I want to jump in, because you're going to make your money in the stock market buying low, selling high. Well, you can't get any lower on a 30-day low. Currently, the 30-day low is 70.89. So I'd like to keep my eye on it for the next couple of weeks to see what a great opportunity to jump back in. Because right now, I'm just going to wait until it finds its bottom before I jump back in. Okay, so that's Nike. Now, let's go over the disclaimers for all you people that are here, and all you people may not know me. Okay, so I've been here since since January doing these lives. So here's the thing. Number one, I'm basically a nobody. I don't have a college degree. The only license that I have is a driver's license. That's it. I'm not an accountant. I'm not an advisor. I have no affiliations with anyone, anywhere, anyhow, anyway. Don't. I'm just a guy who lives down the street, around the corner, who does something that nobody else does. I share my trading philosophy with you guys. Now, I came up with the trading philosophy when my daughter was 9, back in 2008. She wanted to trade just like me. Okay, simple, safe, predictable, consistent, all that kind of nice, neat stuff, without her able to lose anything. So I'm very adamant about these rules, and I try to stick them as best I can. Now, I'm only human, so every once in a while, I do stray a little bit, but I have guys here that try to keep me back on track. Because you know what? I have the same issues as you guys. I got that little green monster on my shoulder saying, profit, profit, profit. Yeah, but I got caught a couple of times, and so I try to stay on course. I do. Okay, I do feel once in a while. I think this week I lost a bunch of money because I got off course. But let's get back to where we are. So that's Nike. So here are the disclaimers. This is not any advice whatsoever. We're all adults here. I do not want to hear, you said this, you said that. No, I did not. If I say anything, I want you to disregard anything and everything I say. Do your own research. If I say, hey, look, here's Nike, and I can buy it at $74.98, well, that's the price right there. I'm just reading the numbers that are there. Now, realize this, that these are aftermarket numbers. So as soon as the market opens at 9:30 on Monday morning, all these numbers are going to change. And here's the funny thing about it. As soon as 9:30 hits, those numbers will continue to move until 4 p.m. Monday afternoon. And it's like a roulette wheel. Numbers change, numbers change, numbers change, numbers change, numbers change. And it doesn't stop until 4 o'clock. After 4 o'clock, it's kind of like freeze frame. You know, and everything freezes. And this is the numbers from Friday afternoon. Okay, so hypothetically speaking, if I'm buying it at $74.98, I sell the 74s, I'm collecting 117. The 117 is 1.58% for the week. So what has to happen to the stock? Well, the stock stays above 74. Great, I get my money back, and then I'm into another stock the following Monday. If the stock is under 74, well, I keep the stock, I keep the money, and then Monday, I sell another covered call. But here's the thing. Number one question you always got to ask yourself before you buy anything. Does it make sense? And do I like Nike at that price? Because that's the current price at this moment. You and I, buyers and sellers, we create this mess. Nobody else creates it. We do. The market maker says, open for business. Let's go. What do you got? Okay. It's down here. Oh, 71 bucks. Oh, I like that. Let's buy some. And then a whole bunch of us start buying it. What happened? It goes up. Then it gets to 75.50. And then we think, you know what? From 70 to 75, that's like 60% increase in value, or 75% increase in value. Because the $70 stock a $5.50 move, that's around 70%. It could be 75, I'm not quite sure. But people like me say, ooh, more than a 5% increase? Yeah, I'll take that profit. Why not? Now, I'm only looking for a 1% profit. That's it. 1% safe, predictable, consistent every single week. That comes to over 50% per year. Now, if I sat in front of my computer longer, yeah, I could make a lot more money. But here's the thing. When you get to a certain age, okay, I'm already there, money's going to lose the appeal that it had when you were younger. Now, what my focus is, hanging out with my kids, my grandkids, and just watching the grass grow, playing in the garden, planting plants, going to the beach, just kicking back, relaxing, and not doing a whole heck of a lot. I'm not very good at it because I've only started in November, so I haven't even been retired for a whole year yet, and it's already driving me crazy. I need something to do, so I'm here sharing with you guys. This is my new pastime. All right. Anyway, that's my thoughts on Nike. Okay. And those were the disclaimers. So now let's roll on forward, see some of these questions. Would love to hear your thoughts on SPYI. Someone recently advised me to invest as an income generator. All right, so I'm going to set up a video because I want to record this. This is going to be fun. Because Marky V Laws A. Okay. Marky V Laws A. Okay, you're new here, so you don't quite know how I feel about SPYI, and a lot of other people that are new here don't know how I feel about it also. So I'm actually going to record it so everyone can see what I think about SPYI. All right, hold on. SPYI. Let's take a gander at SPYI. SPYI. NEOS S&P 500 Income ETF. It's a no. Why is it a no? There's several reasons why it's a no. Reason number one why it's a no, no thank you, give me something else, whatever you want to call it, is it is a monthly optionable stock, which means I can only write a covered call once per month. That's 12 times per year. That doesn't work for me. I like weekly optionable stocks because I like weekly cash flow. And also, right now it's at 48.83, okay? With a monthly optionable stock, I have to guess where this thing is going to be in the next 4 weeks. And if I miss it, I gotta wait another 4 weeks. And what is the premium that they're giving us on this? All right, 49.22, the 50s. Look at that. Look at the premium they're giving to us on the 50s. Because right now the stock is at 49, right here, 49.22. Then the premium they're giving us on the 50s, which is the closest, is 10 cents. Now, I know you guys know that 10 cents is not 1% of $50. Because 1% of $50 is 50 cents. Good evening, Lucky Larry. 1% of $50 is 50 cents. The easiest way to figure that out, see the purchase price right up here, which is the ask, 49.22. You take the decimal point and move it over to the left 2 spots. So it says 49.22. So if you move it over 2 spots, that'll be 0.49. 0.49 is 1% of $49. Okay, now if this is giving me 10 cents, okay, and I've got to hold it for 2 weeks, because the option on this one, 16 August, is 2 weeks away. So I'm getting, okay, let's get the calculator out. Clear this. 0.1, 10%, divided by the purchase price, 49.22, comes to a grand total of 0.2. 0.2% for 2 weeks, which means I got to divide that in half, okay? Which means I'm getting 0.1, 1/10% for the week. What's 1/10% multiplied by 50? Well, let's try it. Okay, so it's 0.2. I can divide it by 2 because it's 2 weeks. Okay, so it's 0.1. I multiply that by 52 weeks. It gives me a grand total of 5.2%. That makes my flesh crawl even hearing it. Now, I'm showing you safe, predictable, consistent 1% per week. And you want to look at this, it's giving you 5% per week. But wait, I'm not finished. If you order now, I'm going to double down. No, okay, just kidding. Let's take a look at Yahoo Finance. Yahoo Finance SPYI. SPYI. First thing I want to take a look at is the summary. Okay, year-to-date total return, 8.7%. Expense ratio, 0.68. It's not giving me, oh, here's the yield. The yield is 11%. All right, 11.75%. Well, the yield's not that bad. It has double-digit yield. Okay, so let's take a look at the historical performance. Now, what am I looking at in historical performance? Specifically, I'm looking at how consistent are they with their increase in dividends. It means how profitable are they? Because if they're continuously profitable, you got to be kidding me. That right? Let's try this one more time. Oh, it is right. Holy cow. Yeah, hell no. This thing's only been paying dividends since 2022. That's only 2 years. 2 years. You know, most companies go bankrupt within the first 3 to 5 years. Okay? This is only into 2 years. Oh, hell no. What the hell are you thinking? Do your homework. Do some research. How consistent are they with increasing dividends? 49, 47. Wait, it went down. 47, 48. Okay, went up. 46. Wait a minute, went down again. 47, 47, 48, 49. That's not consistently going up. Okay, so there's over 300 companies that are consistently profitable every single year. Now, I'm not looking for capital appreciation. This has to be a capital appreciation company because the dividends aren't consistently increasing. Well, that's one reason. Reason number two, they're monthly optional stock. I like weeklies because I want a weekly cash flow. Okay, and the yield, 11%, it's not as bad as some of them. Some of them I've seen like 1 or 2% for the year. This one's at least giving you 11%. Now, if you're okay with 11% and giving your money to a machine, I've seen way too many Terminator movies. I've seen way too many, apocalypse movies. I'm not trusting my money to a machine. And what do you think an ETF is? Electronically traded fund. And don't give me that crap. It's an exchange traded fund because the freaking exchanges are all electronic. Okay, so you're giving your money to a computer, and the computer's giving you 11%, and it's not giving you any other opportunities to make more cash flow other than a monthly option. Okay, when we've seen the monthly options are 0.1% per week. No, I'm looking for a full 1% per week. That's 52% per year. 0.1% is 5% per year. Huge difference. So, needless to say, Mr. Mark, there's my opinion on SPYI. It's, you can call... No, it's just a big old turd to me. I don't do ETFs for the most part because they just don't pay. Uh-oh. Now somebody wants to look at the Qs. So you let somebody take a look at SPYI, and then you get the people who want to take a look at the Qs. All right, Mark, there you go. All right, Alvin, how are you doing there, Alvin Pro King? Wide open Willie. Look at open interest, December 20 puts. Sorry, dude, I don't do puts, number one. Number two, I don't do the spiders. Sorry, spiders are way out of my price range, and I just don't do puts. But if that's what you like, hey, more power to you. I don't ever tell people what they should and shouldn't do. If it works for you, great. I'm just sharing with you what works for me and what I'm looking for. All right, so let's continue. Logan, rules. Did you like those rules? Number one, never buy something you don't want to hold long term. Number two, never sell at a loss. Number three, plenty of increased dividends. I personally like 20. Weekly options. And make sure the numbers work. That's number 5. Boeing, Sage, we're going to do Boeing. Because I did say we're going to do Boeing, BA, here we go. Boeing, tra-la-la, 169.95. We're looking at the 170s. Look at the 170s, $3.70. That is almost 2%. Is it? No, that is, 170, 170 is 340. That is over 2%. Cool beans. All right, so it's over 2%. Great. We know the numbers work. Now we want to look at the chart. The chart, high, low, where was it, where is it, what direction it's going? Fine. Now I want to take a look at the 90-day chart. Because, see where it is right now? The bottom is down here at 160, and the top's up there at 270. So it's somewhere in the middle. All right. Now I like the drop right here. See the drop from yesterday? Thursday and Friday, two big drops. Well, this is Boeing. Boeing is one of those companies that makes the big jet airplanes, and they have government contracts to build weird stuff. So let's take a look. Okay, a year ago, 232. Topped off end of December at 266.85. The bottom was the end of April at 158.78. All right, last 90 days. Take a look. Up, down, up, down, up, down, up, down. Here we are right here. Getting very close to a new 90-day bottom. Well, great. I love 90-day bottoms. They're almost like a 30-day bottom. There's a difference between a 90-day bottom and a 30-day bottom. 30-day bottom is like, gives me a good idea of what's going to be in the next 3 to 5 days. 90-day bottom gives me a good idea of what's going to be in the next month or two. So it depends on your time frame, how you want to do it. I do it every day. Say I'm here in the morning, because we have a morning trading group, if you guys didn't know. A bunch of us get together and we trade every single morning, Monday, Tuesday, Wednesday, Thursday, 9 a.m. until we're done. And then on Friday, it's 3 p.m. because the market closes at 4. And if we're buying everything on Monday, we want to know what our position is going to look like before the options expire. Because remember, if we're doing weekly options, this option here, 9 August, it's going to expire Friday. Well, I haven't signed. I haven't sold any yet because that'd be on Monday. Hold on, I'm going to go a little bit more. Dum, dum, dum. Here we go. So we're going to go a little bit more looking at the 30-day chart, because the 30-day chart will give me an idea of where do I think the company is going, the stock price is going to go in the next 3 to 5 days. Because my interest is jumping in on Monday and getting in on Friday and getting that safe, secure, predictable 1% per week. So let's see if we can do it with Boeing. Now we already know that Boeing, okay, if I buy it first thing Monday and I sell the closest strike price, well, I'm getting 2%. Well, 2% is a hell of a lot better than 1%, and 2% per week is over 100% per year. But do I get 2% every week? No. I average 1% a week. Okay? So let's take a look. That's the last 90 days. Last 30 days, looks a little different, doesn't it? 30 days ago, we're at 184. Our 30-day high is right here, 197. Okay, 197. 2 days later, we're at 167. Okay, so 197 to 167. That's a $30 drop. Now, a $30 drop on, well, that's about 20, less than 20%. Okay, around 15, 17% drop in 3 days. So what do you think? Okay, it even gapped down here on Friday. So she gaps down and keeps on dropping. Well, here's the bottom right here. Now, before I jump on this on Monday, I'd like to do a little bit of research, a little bit of news. Why did it drop? Okay? Is it just profit taking? Well, if it is, that's quite a bit of profit taking in 2 days. And that's a lot of profit taking really quick. All right, that being said, let's take a look at seasonality. Now, seasonality, unless you guys don't know this is a seasonality chart, and it's set for 10 years. Let me explain briefly. The far left, January 1st. The far right, December 31st. This is a whole year. Okay? A whole year is 266 trading days. Give or take. 266, 265, somewhere in that area, depending on the year. Okay, so 266 trading days. The blue line represents the movement for this year. This blue dot here represents Friday. So this is where we are right here, just in the beginning of August. See the dates down here? January, February, March, all the way to December. All right. This red line represents the average movement over the 10-year period. So last 10 years, This is the average movement right here. I want to take a look at this area right here, the first 2 weeks of August. So I'm going to take my mouse, my little cursor, put it right here, click left, drag right, and there you go. There's the next few weeks. Right, the blue line's here. That's where we are right now. But look at up top. That's the red line. Tells you what the stock is going to do based on history. Okay, last year, the year before, the year before, the year before, so on and so forth. It's basically going to go up a little bit, pull back, and then just go sideways. All right, nothing huge, but it doesn't scare me away. Now, it's not guaranteed. All it is you're like looking in the rear view mirror as you're driving forward. Okay, so stock usually goes sideways. Maybe a little dip, maybe go back up a little bit. Okay, so the question, do I like Boeing? And do I like Boeing at 169.95, like 170? That's a question only you can answer, right? But Boeing, I'm going to put it on our list so we can see when the new bottom shows up. Okay, because the new bottom could show up Monday, Tuesday, Wednesday, and it may be a good contender for next week because it's offering 2%. Okay, and ask yourself a question: do you like Boeing? Do you think Boeing is going to go out of business in the next couple of years? Well, they got contracts with the federal government, the Department of Defense, to build weird stuff. Well, anyway, that's a good one. All right, more Toto. What's your opinion on Rivian long term? All right, Toto, to be 100% honest with you, Rivian is a new company. They do not have any historical performance behind them, which means they do not have 20 years of increased dividends. Now, you can put your money anywhere you want. Totally, perfectly fine, whatever you do. Me personally, I do not do companies that are less than 20 years old. Specifically, less than 20 years of increased dividends. You can have a brand new company that's still, it's not profitable. As a matter of fact, Amazon. Amazon is still not profitable. They're still losing money every year. Okay? They're one of the richest companies there are, but they're still losing money every year. They're not even profitable yet. All right. So, that being said, let's move on. So, Rivian to me is a no. Sorry. Sent chili peppers. Thank you for that very much. With Harris, everything's going to go down. No innovation, competition from Adidas. Okay. You won't beat cheap calls on SQQQQQQQ this week. Spots Gone Carpet Cleaning. All right, Spots Gone Carpet Cleaning. I don't do the Qs at all. Okay? So just for the fun of it, SQQQ. All right. So it does have weekly options. It's at $9.89. Let's see how often they actually pay their dividends. And do they pay dividends? SQQQ. Oh, look at that. They do have dividends. Yeah. 2017. Oh, and look at the dividends. Let's take a look. Now, you like this, perfectly fine. You can like whatever you want. But take a look. 2017, $3 dividend. 2018, $3.50 dividend. 2018, $4.10 dividend. 2018, $6.70 dividend. 2018, $10.30 dividend. Very appealing. Look at 2019. 2019, $2.90. Again, $6, $4, $2, $1. And look at 2022, 15 cents. They went from, what's the highest? $10.30 is the highest dividend. Now they're down to 15 cents, 20 cents, 27 cents. Hell no. What the hell are you thinking? It's your money. Put your money someplace safe, someplace predictable, someplace that's actually profitable. This is not profitable. If they're continuing decreasing the dividend, how can you possibly say that's profitable? The dividend is the portion of the profits. The portion of the profits given to the investors. If you're an investor in the company, the person you give the money to gives you less and less money every year, what do you think that says? It says, hell no. I'm not going to put my money into a company that continually decreases its dividend. That means they're not that profitable anymore. So, SQQQ? Hell no. That's just my opinion. If you like it, more power to you. Where do you check dividend history? Hey, Big Drew, check it out. Yahoo Finance. Okay, put the ticker symbol in. Okay, quote lookup right over here. That's where you put your ticker symbol in, and then over here where it says historical data. Okay, it gives you all the information from the stock since the stock started trading. Okay, if the company's old, it'll go as far back as you let it go. All right, but there's no real need to go past 10 years. Okay, because 10 years ago was a totally different world. But 10 years, I want to see what's happening. Here, 2017, number one, they haven't been paying dividends for more than 10 years. What is it, 17 to 24? It's 7 years. They've only been paying dividends for 7 years. Okay? And they started paying at $3, and they went all the way up to $10.30. Now they're at 16 cents a share. And you think this is a good deal? Hell no. Sorry. Seriously, dude, do some research before you put your money in anywhere. Ask yourself a question. Did I do my research? Do I know what this company's doing? Is this company profitable? Well, clearly they're not. Okay, they keep going down with their dividends. And the dividend is the profits that go to the shareholders. So if the shareholder profits are less, well, more than likely the corporate profits are going to be less. So this is consistently losing money, in my opinion. So it's a hell no. And it's only 7 years of increased dividends. 7 years of dividends. No increases whatsoever. It's consistently going down. All right. Node, SQQ. Let's get something good. Okay, you guys got to give me something good. SQQ, no, hell no. Okay. Gilans, Merck is on the list for next week for me. Well, let's take a look at it. MRK. Ooh, before I forget, a couple of people I asked specifically to let me know how their trades worked out on Friday. Because a couple of people were new and say, hey, I'm doing my first trade. Well, I'd like to hear how that worked out for you. All right. What are we looking for? Merck. MRK. Now, just to let you know, Merck is on my list. I gotta stop this and because we're doing new. I got a new. Another disclaimer for you guys. All right, now you will find if you're here long enough that there are 27. All right, let's go. Let's do this. There are 27 imposters pretending to be me. Okay, you'll see Dividend Stock Talk spelled different ways, and they will try to coax you into sending them some money about some crypto thingy or some this deal or some that deal, or they get a great pot pretending to be me. No, 27 people pretending to be me. If you really want, now I say this every night, and it doesn't always work out this way. If you really want to talk to me, put your phone number in the DM. I will personally call you. Now I call 2, 3, 4 people a day, okay? Because out of the funny thing is on average between 3 to 15,000 people will come through this and watch, a little bit here, a little bit there, a little bit there. But out of all those people, 2 or 3 people actually leave their number and I'll actually call them. So it amazes me. You have an opportunity to talk to someone who's been doing it for a while, and you're sitting here, you're watching, so you must be somewhat interested. So let's just drop your number down. I'll give you a call and see if it is right for you. It's not right for everyone. It's slow, it's boring, it's monotonous, it's repetitive. I do the same stocks over and over again. Merck, MRK, I like the company, I do. Have I bought it before? Yes, I have. I will look at Merck 4 times a year. Why? Because they pay a dividend 4 times a year. I'll buy it just before the EX date if the numbers work and the chart tells me it's the right time. Okay? Now, let me continue. So, as I was saying, 27 people pretending to be me. If you get email, text, a DM, whatever, from someone who says they're me, number one, I don't do cryptocurrency. I don't do futures. I don't do Forex. I don't do, what's that other hot one that's going around nowadays? No, I don't do commodities. There's another one. The only thing I'm doing here is dividend stocks only. Now, I do have one other channel, which I'm getting started as we speak. It's called The 10-Minute Trade. So if you've seen any of my videos, they always start the exact same. Hey everyone, this is James from Dividend Stock Talk. Brought to you by the 10-Minute Trader. So the 10-Minute Trader is my website where I teach people how to do dividend capturing for those that you cannot do hundreds of shares at a time and those of you starting out with smaller accounts. Yeah, it's going to be geared to something a little bit different. I'm not going to get that into that here, and I'm not getting into this stuff over there. So two separate channels, two separate trading strategies. Just to let you know, there are people pretending to be me, so be leery. And if you really want to talk to me, send me a number. I'll give you a call. Okay, so Merck. We're taking a look at Merck. First thing I want to see, what's the current price? 115.54. So we'll be looking at the 116. The 116 is only going for 114 to 122. So you might be able to squeeze your 1% out of there if you do a limit order. Okay, fine. So let's take a look at the chart. I don't like this right here. All right. Let's jump on over. The high, the low, where it was, where it is, where is it currently going? Currently going to the downside. Let's zoom into a little bit closer. Last year, 105.66, bottomed out on the 18th of October at 98.99, topped out at 134.93. Okay, that was the end of May. No, end of June, 6/24. Okay, so from there, here's where we are. Not quite the last 30 days. Let's go to the last 30 days. Right here. Last 30 days, we opened up at 127.69. 30-day high was on the 12th of July. She pulled back, a little bit up. Pulled back, a little bit up. Okay, from there, she drops down. Thursday was the 30-day bottom. Okay, great. Big drop. Okay, from 128 down to 112. That's a big drop. That's over a 10% drop. So yeah, you're going to have people snooping around on Monday and Tuesday saying, wait a second, this thing dropped over 10% last week. So I'm going to jump in. So here's your bottom here. We already have one up day. Now for me, I like two up days. Two up days isolate a 30-day bottom. See, right now, it's not quite, to me, not quite a 30-day bottom because you have a potential of having a down day tomorrow, which is Monday. We actually don't count Saturdays, Sundays, or holidays when we're actually trading. So it's like yesterday, okay, it's Friday, and tomorrow is Monday. Okay, so Monday it could go up again, and if it does, that's 2-day high. That's an indication for me to jump in. But what I don't like is it's only 1%. Now the one we saw a little bit ago was that Boeing. Boeing's offering 2%. Okay, Nike was offering 1.58%. So I would take 1.58 and 2% over this any day. But it always depends on, the numbers and the chart. So if I see another day on the upside, yeah, maybe I will. CMG, Henry, CMG, really? I actually had some CMG and I let it go. CMG. Alrighty. CMG, I usually don't do CMG because it's Chipotle. It doesn't have 20 years of increased dividends. I don't even think they have dividends. No, they don't. But I did buy it the other week, not last week, but the week before. And the only reason I bought it the week before, well, because there's your top right here, she drops down, and right there, wait a minute, not right there, oh, it's right over here. Right over here, it looks like the 30-day bottom. So we had 2 days the upside, I jumped in and I got 4% premium. Well, great. I sold it again this week and I got another 2% premium. But the stock dropped a little bit. I let it go, but I still made money off of it. Okay, fine. But I normally don't do Chipotle. A year ago, we're sitting at 38.49, bottomed out in October at 35.45. The top, which was a couple of weeks ago, okay, middle of June, 69.22. Okay, here's the bottom here, which was not Friday that just passed, but a week ago Friday. That was on the 26th. Okay, Monday, Tuesday, Wednesday up, Thursday, Friday to the downside. Now we're sitting at 52.57. Okay, and we're looking at the 53s, and the 53s go for 95 cents. Now that's more than 1% if you like Chipotle. Okay, the high was here, the bottom's here, and this is where it is now. It doesn't have any dividends. For me, I'm not going to do it again because I made money off of it. Okay, fine, but I didn't feel good about it. How's that? Okay, user 5224, Dell. I actually have some Dell. Same thing with Dell. I like Dell, but look at where it is. Okay, it dropped. Okay, it's not at the low of the year. The low of the year is way over here, way down in the 50s. Okay, and the high is in the 180s. Well, right now it's at 102. Okay, fine. It's going for 102.36. The closest one is going to be either the 102, which is going for 350, yow, or 103, which is going for $3, yow again. So let's take a look at the numbers closely. A year ago was the bottom of the year. Okay, now it's 52.32. So here's an interesting question. 52.32 a year ago. The high 180. So 52 to 180. That's a 300% increase. Okay, so 50 to 100. That's a 100% increase. 150% increase. No, 200% increase. Almost 300% increase in a year. Well, hell yeah, there's going to be profit taken. Look, profit taken. Now we're at 102. Okay, even at 102, that's still 100% return from those who bought it exactly a year ago in the $50 area. Okay, now it's at 102. That's a 100% increase, even though it dropped. How much did it drop? $80. It dropped $80, which is what, $80 from 180, not quite 50%, probably like a 40% drop. Is that right? About a 40% drop, and it's still at 102. Okay, let's take a close look at the numbers. Okay, it topped off the year at 179. Yeah, 179.70. A couple of days later, she's in a new channel. What is that? 133 to 146, and she just started dropping. Last 30 days. This is what is going to be important. 30 days ago, we opened up at 147.69. 30-day top was 150. 150.23. Okay, now we're sitting at 102. Okay, that's a 50% drop in 30 days. Okay, now think about it. A 50% drop in 30 days. Sorry, gotta do the video again. And here we go. All right, so Dell has a 50% drop in 30 days. From 150 down to 10. What was the actual bottom? The actual bottom was 99.93. That's a 50% drop. So ask yourself this question. You got a 50% drop. What are you going to do come Monday? And it's Dell. Okay, Dell is a household name. I actually have some Dell computers. Okay, she dropped 50% in value over the last 30 days. So more than likely, yes, it's not guaranteed, but usually, why isn't that working? Yeah, there it goes. Hey, Joe, how are you doing over there in Instagram world? Woohoo! So a 50% drop in 30 days, more than likely you're going to have people jumping in on Monday trying to take that ride back to the top side. Okay, that's a huge drop, 50% in 30 days. Can you imagine being in the shoes of someone who bought it at 150 and now it's worth 100? That's a 50% drop. All right. So that's Dell, and look at the premiums. Okay, even right now, the 102.36. That's what I can buy it for. 102.36 right here. Okay, if I buy it at 102.36 and sell the 103s, I'm bringing in $3. $3 is almost a 3% return. And the number one question you should be asking yourself is, do I like Dell? Okay? Do I like Dell? Can I picture myself owning Dell for a long period of time? Let's move on because I have 93 questions I missed. Alma, Ford, tra-la-la. Okay, 10.06. The 10s are going for 17 cents. You take the 6 cents off here, you're walking away with 11 cents. I know 11 cents doesn't sound like a lot, but 11 cents on a $10 stock is over 1%. And we're talking about Ford. Ford's been in business for over 100 years. I don't think they're going anywhere. Okay? So, let's take a look at the last couple of weeks with Ford. Here we go. And here's another one to keep in mind. 30 days. 30 days ago, $12.90. Okay? 2 weeks later, we're at the 30-day top at $14.85. $14.85. Okay? 2 weeks later, she drops all the way down to $10.03. So it loses almost $4. $4 on a $14 stock is well over 20%. Joe Sullivan. EL looks sweet. Estee Lauder. Oh, don't tell me Estee Lauder. I actually have some Estee Lauder and I've held on to it for a long time. And it's still down from when I bought it for. Anyway, so that's Ford. I like Ford. I do. It's given over 1%. Look where it is. It's actually at the bottom of a 30-day period. Me, I like 2 days to the upside before I jump back in. So Ford is on my list to take a look at next week. I like 2 days to the upside. That could be Monday. That could be Tuesday. I could be in it by Wednesday. I don't know. It all depends on what happens Monday and Tuesday. But right now, it's at the bottom. Now, I have 99 questions. So I'm going to blow through some of these questions really quick. I apologize if I don't get names. You won't beat cheap calls on SQQQQQQQ. Yeah, sorry there, Spot Gone Carpet Cleaning. I went over the SQQs. I took your opinion. I took your advice. I gave you my opinion. You don't like it. I can't help you out with that one. It doesn't meet my criteria. Why would I waste my time on it? That's what I have to say about the Qs. Okay, Sage, we already looked at Ford. When the SPY is red, the Qs is green. Okay, good. Don't really care. I don't do the SPYs and I don't do the Qs. Chapo and Charlie's World, 70 to 75 is 60% increase. No? Did I mishear that? No, because $5 on a $70 stock is probably around 40% increase. So yeah, I think you didn't hear that wrong. Joe Sullivan. So, what's your thought on Estee Lauder now, especially since you already own it? Yeah, I'm displeased with Estee Lauder. That's my opinion. But we'll take a look at Estee Lauder in a little bit. I'll write that down here. L. We'll take a look at it. All right. Let me finish going through some of these. Should I buy Nike stocks? I can't honestly give you the answer to that question. Okay? I can't give anyone any advice because I don't know anything about any of you. I know some of you. Now, some of you I've been talking to on the phone, and I do know you. You I can give a hard time to. But you guys I don't know, okay, like Big Drew. Big Drew, you've been here a few times. I haven't talked to you on the phone, so I really can't give you advice. What site do you use to validate dividend history? Yahoo Finance. Historical performance, dividends only, maximum amount. Intermountain Gold Refiners. Cool. Hello. AAL and INTC. AAL and ANTC. All right. Juggernaut, no to spies. Tanner, you love spies too? Can't help you out. Now, AAL. What the heck is AAL? American Airlines? Interesting. All right, so American Airlines, $9.69. The 950s are going for $37. Ooh, nice premium. That's over 2%, 3%? Something like that. 19. No, over 2%. Okay, fine. A year ago, we topped off at $16.27. Recently, the bottom was on Friday. So a year ago was the high of the year. Friday is the bottom of the year. 3 down days in a row. Last 30 days. 30 days ago, look at it, we got a triple high. Okay, 30 days ago, 11.22. The 10th, 11.22. The 16th, 11.24. Okay, triple high. So apparently it's not worth more than 11.24 because if it was, it would have hit it. She dropped down, retraces, drop down, retraces. Now we got to drop right down to here, and we're sitting at 963. Now, what does American Airlines usually do this time of year? Seasonality tells us this thing basically goes flat this time of year. Okay, fine. So ask yourself a question. Do I like American Airlines? Well, it's giving me over 2%. Bahadagar. Okay, dude, I have no idea who you are. You want to be invited to the live? I insist you send me your phone number. We'll get a call in. We'll chat. Blah, blah, blah. So on and so forth. All right, Intel. Yo, Johnny. Intel. Okay, so that's AAL. We'll be keeping our eye on that one. AAL. Because as soon as we find the 30-day bottom, okay, get a gap down on Friday, and here's where we are now. Okay, look, 30 days ago, here's where we are. That's a nice movement. So I would be looking for the bottom. Once I find the bottom and turns around, I'll take a look at the numbers again and see if it is a good play. Okay, but we'll keep an eye on it. All right, INTC. Intel. Ooh, I like that drop. Okay, so Intel. 21.59 a year ago, 34.60, topped out at the end of December at 51.35, and Friday was the 30-day bottom. Look at the last 30 days. 30 days ago, 31.19, topped off at 37.30. 37.30. So 37.30 all the way down to 20.30. 2030, that's $17. Okay, that's a 50% drop. Joe Sullivan, you like GILD. Ugh, I feel sorry for you, dude. Okay. You like Estee Lauder and GILD. Okay, Estee Lauder and GILD. All right, we'll take a look at both of them. You might be disappointed with well, I'm disappointed. Bet you like that one. All right, so Tanner, you like SPYI? Nope, can't help you out with Juggernaut. Can't help you out with that one. Sports gone. Will you beat cheap calls on SQQs this week? Well, Spot's gone carpet cleaning. I average 1% per week. That's 50% per year. If I sat in front of my computer all day long, yeah, I can make a lot more money than that. But I am perfectly happy with my 1%. My 1% allows me to live a comfortable lifestyle. You get to a certain point in your life where comfort, peace, and quiet are better than a big fat chunk of money. That's just my opinion. I could be wrong. So I don't like the Qs. Sorry. I still got 99 questions to go through. Holy cow. Does Ford meet your requirements? Yes, it does. Intel is going down as well. Of course it is. Can you do PWR? Now, I've never heard of PWR. Okay, now when I say I've never heard of something, well, that's when you should say, wait a second, if he's never heard of it, maybe it's not a good company. No, I have a certain trading strategy. Okay, my trading strategy is simply, I'm looking for a simple, safe, predictable, consistent 1% per week. That's what I'm looking for. That's me. If you guys like these other things, hey, that's perfectly okay. I don't try to dissuade anyone from doing what you think is right for you. I'm just giving you my opinion, and that's all it is. It's not advice, it's just my opinion. All right. So somebody wants to look at PWR. Now, when I say I've never heard of them, it usually means that's a no. So PWR is a monthly optionable stock, which means I can only do it once a month, 12 times a year. That's a no. Sorry. Yay, everything is going to go down with Harris. Joe, I don't want to get into politics. Really don't. All right, keep going. More questions. Thank you, Big Drew. Pacha Sahari. How can I find these 300 companies you mentioned which you like? All right, you ready? Write this down. Come on, write this down. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Go to Google. Dividend Kings list 2024. Dividend Champions list 2024. Dividend Aristocrats list, 2024. Dividend Contenders list, 2024. Warren Buffett stock holding list, 2024. That's 5 lists I just gave you. Okay, that 5 list will give you more than 300 companies that have consistently increased their dividends every single year. Not once in a while, every single year. The only way you can make it onto any one of these lists, except for Warren Buffett's, is you have to consistently increase your dividends every single year. Now there's 9,698. Let's check the number because I'm not 100% sure anymore because we're going into a new week. And we're going to look up under FinViz. FinViz, that's financial visualizations. Cool little website. Gives you lots of information for free, but not, not everything you need to know. Okay, FinViz, the screener. Here's the number right here. Okay, I am wrong yet again. Okay, so here's where I am wrong. See the number right there? 9,614, because we checked last Monday. Last Monday, it was 9,598. Well, today, there's 9,614 companies in which you can invest in at any time. But I only look at 300 because there's only about 300 that have increased their dividends for 20 years or more and have weekly options. But this website will go a lot of information for you. Okay? But what it won't do is won't tell you who has weekly options and who consistently increases them. It won't tell you that. All right, let's get out of that. Let's get out of that. Let's go back to chart. So, PWR, big fat no. Sorry, dude. Q's, Fabi Trade. Q's is a big fat no. Reason being, Q's is a big fat no. Number one, it's over 250 bucks. Okay? I like to keep all my stock trades below 250 because however much money you think I have, I don't. Okay? I honestly cannot afford 1,000 shares at 448. Sorry, I don't have that kind of money. Okay? I like to keep my trades under $250 per share. Now, another reason why I don't like the Qs, because apparently people don't want to just take my word for it, I don't like the Qs. Well, I don't like them because they just don't meet my criteria. Okay? Dividends only for the Qs. Now, the Qs go back way, way, way back, so I'm not going to go that far back. But let's go back 20 years, okay, to 2010. Okay, let's take a look at some of the dividends, and then you tell me if this is increasing consistently. Okay, so 2010, 5 cents, 9 cents, 9 cents, 11 cents. Ooh, it's going up. 11 cents, 8 cents. Wait a second, it just went backwards. 12, oh, it went up again. 10, now it went down again. 16, 2011, 5 cents a share. Okay, 11, 14, 20, 37, 16, 22, 24, 27, 37, 21, 25, 24, 39, 25, 25, 26, 34, 32, 29, 29, 36, blah, 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 blah. Yeah, no consistency whatsoever in the increases in the dividends. Okay, number one, it's overpriced. Number two, there's no consistency in the dividends, which means they're not consistently profitable. Why the hell would I invest in that? Think about it. So no, I don't do the Qs. They just doesn't work for me. It's like you're giving your money to your uncle, and your uncle's just breaking even every year, and every once in a while, he's losing money. Because your share of the profits are getting less and less. Okay, if the company is consistently profitable, they're going to give you higher and higher dividends. It's actually so elementary, it amazes me how adults don't understand that. Okay, we're all adults here. You got to be 18 in order to be on this channel. Okay, 18 years old, and you don't understand if you're not consistently getting higher and higher and higher returns on your money, or the person you gave your money to is not consistently profitable. It's actually that simple, and I don't know why adults don't understand that. My 9-year-old daughter understood it when I told her. Increase dividends only. Okay, if the company's decreasing their dividends, that means they're not as profitable. Well, I'm not giving my money to you. I'm giving my money to, whoever's profitable. All right, Joe, you like ExxonMobil as well? Woohoo! All righty. All right, so let's move on to Q's, R, and No. And I have a bunch more questions to go through. That happened to me last week. All right, Sage. Accident, LOL, oops. All right, Evie, how you doing? Abbott Labs. Ooh, I like Abbott Labs. Is this the 10-minute trader? Well, this is James from the 10-minute trader, so I can say yes. Okay, this is James, Dividend Stock Talk. This is the name of this channel, brought to you by the 10-minute trader, which is my other channel, and it's my website. If you do a little bit of research on Google, Bing, whatever, and say the 10-minute trader, who owns it, you'll say James owns it, and James has owned it for the past 20 years. Okay, so I've actually been doing this for quite a while. And for those of you that are new here, let's give you a little bit of a treat. Yeah, just for the fun of it. Just for the fun of it. So here's the 10-minute trader. We're going to pull it up real quick. There you go, right there, the 10-minute trader. Now, I just got this website redone, so it's a little bit on the new side. And yeah, some of the buttons aren't working properly. But here's the ones I want you to see down here. Okay? Current trade for 2024. Okay, and you want to view all of them? Well, here they are. Here's all my trades for 2024. Okay, week 29, 28, 27, 26, blah, blah, blah. We actually just finished week number 30, and Monday will be the beginning of week number 31. Okay, but that's not what I wanted to show you here. What did I want to show you? Oh, yeah, that's what I wanted to show you. Okay, social media. YouTube, Twitter, Facebook, Instagram, podcast, blah, 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 all that kind of stuff. We're going to go over to YouTube. Just for the fun of it, you know, for those of you that are new here that don't know me. Oh, check it out. 2 lives. Okay, this live and this live. See, just the screen, and there's me standing in front of the screen. Okay, that's not what we want to do. What we want to do is go to videos, go to the oldest videos, and look at this right here.
Hi, I'm JC, and as you being part of my internet.
I gotta unmute it.
Which my dad does let me call him that, but I do. Being part of that, you're going to be getting. Hi, I'm JC, and as you being part of my internet website company, which my dad does let me call him that, but I do. Being part of that, you're going to be getting weekly.
What's 12? 12. You can buy 12 different companies for the whole year and still make only 20%. That's easy. One trade a month. Who can't do it? But, let's do 2 trades a month. 20 days a month in January. You can do 2. 1 every 10 days. Okay, so you get 2 January, 2 February, 2 March. Blah, 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 blah. 25 for the whole year. If you get 2%. That's 20%. That's close to 50%. 50% per year. That's cool.
Now, I did that video. Holy shit, I got 1,200 subscribers there. Interesting. All right, I did this video 13 years ago. Okay, saying the exact same things that I'm saying now. Okay, back then I had a little bit more hair. I was a little better looking, blah, 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 all that kind of nice, neat, fun stuff. But that's 12 years ago, 13 years ago, when my daughter was, I think she was 11 at that time. So I've been doing it for a while. And yeah, I average about 1% per week. And certain stocks I just don't look at because they just don't make sense to me. All right? So let's keep on moving. Can I do PWR? We already did PWR a little while ago. I'm sorry it's taking me so long to get to all these questions. PWR is a no. Sheila's here. How are you, Miss Sheila? Is Misty a really good deal, or has it overstayed its welcome? Well, let's take a gander at Misty, and we'll go from there. So hold that thought for 1 second while I adjust this video. Adjusting the video. Tra-la-la. All right. Oh, Wildcat Sam. Happy Saturday to you, too. Let's take a quick look at Misty and see what Misty looks like. MSTY. Yield Max, MSTR. Oh, come on. I don't do ETFs. They're usually always a no. Usually always a no. Monthly options. Only. Yeah, no. Sorry. Who said that one? Not like me. Ah, you're new here. That's why. Sage, James. Have you talked about Ford? Yes, we already talked about Ford. Sorry, Sage. If you missed it, you missed it. Sorry. RTX. Ooh. I think RTX is on the list. Is it? RTX. All right, RTX, even though it is on my list, RTX, even though it is on my list, RTX Corporation, it's going to be a no. And the reason why it's going to be a no this week is because look where it is. Okay? This is the high of the year. I don't do high of the year because what do stocks do? Stocks go up, stocks come down. Stocks go up, stocks come down. That's all they do. They do not come to your house, wash your dishes, make your bed, put those nice little candies on your pillow before they... Yeah, no, they don't. They don't do anything but go up and come down. RKLB. Okay, now, Rob, you're relatively new here. Because I'm really good with names. I am. So if I see someone who's been here for a while, I can give you a hard time. But, Rob, you're new. RKLB. Rocket Lab US. Well, 482, it does have weekly options, but I've never heard of it. So what does that usually mean? Let's get out of there. Let's get out of there. RKLB. RKLB. Now, oh, this is why I've never heard of it. Do you see what it says right here? There are no dividends in the selected time period. Okay, so RKLB is a no. Now, Rob, you're new here. What does the title of the page say? Dividend investing for weekly cash flow. If the company has no dividends at all, why the hell are we looking at it? JP, TSMC, another one. Another one. TSMC, Taiwan Semiconductors, TSMC. Is that right? TSMC, Taiwan Semiconductors. It should pop up. Okay. TSM. It's TSM, not TSMC. All right, TSM. TSM. So I'm assuming you want Taiwan Semiconductors, okay? Taiwan Semiconductors, TSM. I don't know where the C comes from. If you throw the C in there, it says no such thing. Okay, so let's take a quick look at it. Number one, high, low, where was it, where is it, what direction is it going? This is what I want to see right there the last couple of weeks. But before we get there, okay, Joe, I got that. I haven't forgot about you. Okay, Joe Sullivan over here on Instagram. I haven't forgot. Okay. 150.45, the 150 is going for 490. Nice. But why is it that I don't ever trade TSMC? TSM. Okay. So, here's one of the reasons why I don't do TSM. They've only been paying dividends since 2010, which means it's only 14 years. But let's see the numbers. 47, 52, 50, 50, 50, 73, 93, 116, 135, 128, 32. Is that correct? They went from 135, which was the high, and then went to 128. They dropped it, and then they dropped it again to 32. 41, 42, 50, 49, right? But, oh, that's up and down. So TSM, no. I mean, if you like it, JP, fine, you know? But me, the dividends aren't consistently increasing. Now, does that mean it's a bad investment? No, it doesn't mean that at all. That means it doesn't fit my parameters. My parameters are 20 years of increased dividends. Now, there just so happens to be 300 companies that have consistently increased for 20 years or more. So, here's the question. If there's 300 companies that have increased their dividends for 20 years or more, why would I put a company that only has 10 years of dividends and that doesn't increase consistently? Okay, that's Ooh, there used to be a song back in the 70s. One bad apple don't spoil the whole bunch, girl. So why would I have one bad apple in the whole bunch? Okay, 10 years of dividends. Wait a minute, 14 years. 14 years of dividends, and they don't increase. All right. So that's a no for me. Sorry. GSAT is better than ASTS in the long okay with Apple buying them out and having service now. Okay, not like me 75. I'm not quite sure what you're talking about, but let's take a look at those companies that you were talking about. GSAT. GSAT. Yeah, hell no. Sorry. GSAT's a no. ASTS. Alright. Well, it's going to be a no for the reason that it's at the current high of the year. Okay? Well, that's a no. Let's see if how many dividends they actually have. ASTS. Yeah, no. No dividends. So that's a no. Sheila, wait. Why didn't you just keep the Chipotle and keep collecting the premiums? It's interesting. Why didn't I keep it? Well, because I was feeling uncomfortable keeping on a dividend stock. I mean, a stock that didn't pay dividends. That's my answer. I couldn't pass it up because it was paying 4%. Okay, so Sheila's right. Why didn't I stay with Chipotle? Because I normally don't do Chipotle. But somebody asked me to take a look at it, and the little green monster on my shoulder said, hey, it's giving you 4%. Let's jump on it. So yeah, so let's go back and see those numbers again. CPQ, is that right? No. What was it? CMG. Okay, so I was getting it wrong. Okay. Now, Miss Sheila and I both jumped into the same trade. We saw it a couple of days ago. But a couple of weeks ago. Right here. Okay. So this is what we were looking at a couple of weeks ago. And this was the reason I jumped into Chipotle. And the only reason, because I normally don't trade Chipotle. Now, I tell you, I'm totally honest with you guys. Every once in a while, I do have a challenge with the green monster on my shoulder. You know, the greed. Because greed is going to be the killer of a lot of you traders. And I'm just telling you right now, it's factual. You're going to see a trade, and the amount of money you're going to make off is like a lot better than you think. You say, oh yeah, I'm going to do that. I fell for that a couple of weeks ago. All right, on the 22nd, wait a second, that's Monday. Okay, there's Friday right here. Now, here's your 30-day high way up over here, 69.33. So she goes from 69.33 and drops all the way down to 52. Now, here at 52 on the 18th was the 30-day bottom. The very next day, which was the 19th, which was a Friday, okay, the 19th of July was a Friday, was it right there? We checked out the numbers, and the numbers were a 4% ROI. That's 4% for 1 week. So I said, oh, hell yeah, I jumped in. I normally don't. But here's the thing. Monday comes, green day, up. Tuesday, not so much. Wednesday, Thursday, Friday, not so much. Okay, here's the new Friday right here. The 26th. Okay, now I'm feeling a little uncomfortable. So, Monday, this past Monday, which was the 29th, 30th, 31st, 1st, and 2nd. So here we are right here. So I made 4% on this week, okay? I made 2% on this week, and it was in the money. I sold the 51s, and it was in the money by $1.50. So I said, the hell with it, let it go. Okay, I already made 6% off of it, and I sold it for a little. I let it go for less than I paid for it. But I didn't lose money on it. Okay, that's the important thing. I didn't lose money on it. I just let it go because I felt uncomfortable buying a non-dividend stock when I tell people I don't do that. So yeah, every once in a while I do slip, and it's usually because that green monster on my shoulder saying, profit, profit, profit. Yeah, sorry. So it was a 4% trade, and I fell victim to the greed. Sorry. It's Sheila, I apologize. That's what happened. And we talked about that. If you're selling the call, where do you cut your losses if the stock rolls against you? Lorenzo, I usually don't. But I just gave you an example. I just gave you an example with Chipotle. Because I bought Chipotle a couple of weeks ago. I made 4% one week, 2% the next week, and then I let it go for less than I paid for it. But I didn't lose any money. So it always goes by the numbers. Remember that. All the trades always go by the numbers. When did you sell the underlying stock? That was Friday. There we go. Alright. PKD Warrior, it's always different. Samo, hi, do you end up owning the stock sometimes? Well, yeah. Now, when you say, do I end up owning the stock sometimes? I did good on NE. Actually, Gallant, I actually have NE also. Alright, we're going to do NE, then we're going to jump over and take a look at Joe's stuff, because Joe's been patiently waiting on Instagram, so we're going to do that next. Sam, hi, do you end up owning the stock sometimes? Well, I always buy the stocks on Monday. So I buy the stocks on Monday, and then I sell. Alright, hold on a second. Alright, the question is, do you end up owning the stock sometimes? Well, except if I do in covered calls, I have to buy the stock first. Then I sell the covered call, giving somebody the rights to buy it from me, basically for the same price I just paid for it. So it's CMG right now, it's $52.41. Okay, if I sell the 52s, well, that's going for $1.40. That's 2%. Okay, the 53s are going for 95 cents. That's just below 2%. Okay, I have to buy the stock first, sell someone a covered call to give them the opportunity to buy it from me for the same price I paid for it, and I collect the premium. And the premium, oh, that was a good one. The premium is usually more than 1%. That's where I get my 1% per week. Not from the stock going up. Okay? I get it from the premium, selling somebody else the rights to buy it from me. Look at it this way. If I have a car sitting in my driveway and say, you know what, I'm going to slap a for sale sign on it, say I want $1,000 for it. Great. Tom down the street stops by and said, hey, I like your car. Here's $100. Hold it to me until Friday. If I come back on Friday, I'll give you another $1,000. Okay? If I don't come back on Friday, you can sell it to someone else next week, and you can keep the $100. Same thing. Okay? I buy the stock first. I sell someone a covered call, giving them the right, not the obligation, the right to buy it from me at a certain price by a certain date. Now I'm doing weekly options. So 9 August 24, that's this coming Friday. 16 August 24, that's next Friday. 23 August, well, that's 3 Fridays away. I do weekly options only. I want weekly cash flow. I do not do monthlies. If it doesn't have dividends, I don't do it. If it doesn't have weekly options, I don't do it. Hopefully that answers your question. Go on, we're going to take a look at NEE in a couple of seconds. Let's see what they said over here on YouTube. YouTube, hello, good evening. Hey, someone, how you doing? All right, so let's take a look at Estee Lauder, GILD, and XOM. I actually have some Estee Lauder. Now, yeah, that's what Estee Lauder looks like. Yeah, that one. Estee Lauder is on my list, and I do happen to have some. I happen to have it like, oh, yeah, up here. Oh, look where it is now. So does it always work for me? No, it does not. Okay? Just letting you know, being honest with you. Does it always work? No. But on average, I do average 1% per week. All right, we're down to 65. Oh, my goodness. Come on, guys. We've got to like, share, like, share, comment, all that kind of nice, neat stuff. We got to get more people here. All right. Now, Estee Lauder a year ago was the high, 175. The bottom was Friday. Okay. This thing has just been sinking, sinking, and sinking. The last 30 days, where is it? Right there. Here we go. 30 days ago was the 30-day high, 107.57. The bottom was Friday, 93.52. Yeah. Now, if you like Estee Lauder, that's the big question. 97.67, you'd be looking at the 98s, and the 98s are going for 110. That's over 1%. If you like Estee Lauder, EL. So that's a question. You cannot ignore the question. Do I like this company? Do I like it at 97.67? Well, because that's the current buying price right now. Now, yes, you have to ask yourself that question. Now, I haven't dollar cost averaged down on Estee Lauder yet, but until she finds the bottom and turns around and goes back up, I'm just going to keep watching that stock drop. And yeah, I do have it, and yeah, it is dropping. Okay, so Estee Lauder, Joe, I'm going to look at the bottom, wait for the bottom to come. I'm going to write that down. Also, we'll keep our eye on that one. GILD. What was the other one? XOM. XOM. All right. And what else do we have here? NEE. We'll take a look at NEE next. NEE. All right. GILD. Really? GILD. Gilead. Okay. Interesting. And let's see. Gilead. GILD. Is that even on my list? Oh, well, they have dividends. Oh, my. All right, let's double check. Maximum 2015. Yeah, so they've only been paying dividends for 9 years, Joe. But here's one thing I like about them. Take a look at the dividends. 43, 47, 52, 57, 63, 68, 71, 73, 75, 77. That is consistently increasing. I mean, it's not 10 years, but it is consistently increasing. How many years is it? 15. So it's only 9 years. So, Joe, you have to ask yourself a question. With 9 years of increased dividends, okay, for me that's a no. But for you, let's take a look. 76.70, the closest one's going to be the 77. 77 is going for 172. 172 is more than 2%. This is a 2% trade. But look at the chart right here. It's actually at a 30-day high. That alone would be another no for me. Okay, a year ago, 75, topped out at 87.64. Bottom out at 62. She's at a 30-day high at the moment. That's going to be a big fat no for me. That baby's going to come down within the next couple of weeks, in my humble opinion. Okay? Okay, you get to a high 30 days ago. Look where we were. 63. Now you're at 76. That's a $13 increase. That's just shy of, 18% maybe? Okay, you get $13 on a $76 stock. I mean, it was 62. Okay? So, that being said, sorry, Joe, that's a no also. But XOM, I like XOM. Exxon Mobil. Now, I don't have to check the dividends because I know it's a good company. 117.20. The 117 is going for 187. Okay, that's over 1%. The last 30 days, right there. Okay, sorry to say this again, Mr. Joe, but okay, down, up, down, up. Now she's coming down. I like ExxonMobil. I really do. I bought it many times. I'm writing it down for me to keep my eye on in the next couple of weeks. Yeah, actually, it's already written down. Okay, it's already written down on my list for next week. All right, so got that, Joe? All right, so NEE Gallants. NEE. No. Bummer. Now, I did buy some NEE a couple of weeks ago. Okay. I think I might have some still. Hold that thought. Nope, not there. Nope, not there. So apparently I don't have any. But I did have some last week, and I did sell it. All right, so I got 47 more questions to go. Jimmy! Hey, James, what do you think about Intel? We already did Intel today, didn't we? INTC. Yeah. Okay, look at the last 30 days with Intel, Jim. Okay, 30 days ago we were at 31.26, topped out at 37, and that was on the 17th. Look where we are now. We're at 20 bucks. Look at this big, huge gap here. That big, huge gap is going to fill at some point in time. You want to make money in the stock market, you buy low and you sell high. Well, my friend, you ain't going to get any lower than this, which is a 30-day bottom for Intel. Okay, now, Monday, it might drop even more. Don't know. But a huge drop like this, usually Monday, she's going to go up because of the huge drop. And it's Intel. We're not talking about a stock that nobody's ever heard of. I mean, we've heard of Intel. I grew up with Intel. I actually have some Intel computers. Joe, really appreciate it. What is the name of the other channel you are starting? That would be The 10-Minute Trader. So if you go to my bio, hypothetically speaking, there should be a link right to The 10-Minute Trader. Now, on Instagram, sorry, I don't have one on Instagram. Wait a minute, I do. The 10-Minute Trader is on Instagram. Okay, so TikTok is the new channel, The 10-Minute Trader over on TikTok. So I only have 2 channels on TikTok. Be leery, because a lot of people are pretending to be me. All right, Intel. All right, so Jimmy, we already looked at that. 21.59 is what we could buy it for. Okay, the 22s are going for 59 cents, which is more than 2%. Rebecca, you want to be invited to the live? I would really appreciate it if you wanted to send me your phone number. I'll give you a call. We'll chat. If you can contribute to the conversation, I will invite you. But I don't know you. I don't invite people who I don't know. Sorry. All right, so where are we next? How did you do that chart view to see seasonality? What program is that? Caesar the Dressing. Well, Caesar, that's an interesting name. All right, Caesar. I like Think or Swim. This is a trading platform that is now currently owned by Charles Schwab. Okay? You can download it onto your computer and you can use it for free. But Charles Schwab would eventually like you to open an account with Charles Schwab. Okay? I don't trade on Charles Schwab's page because it doesn't have all the perks that this thing has. Okay, this thing has an EX dividend calendar. It has the seasonality that I haven't seen anywhere else. And it also has the trigger trade, which I've been looking high and low and don't have it. Okay. Now, one thing I don't like about it, it doesn't allow me to do fractional shares. So for fractional shares, I go to Robinhood. All right. So, yeah, that's on Thinkorswim. Jeff Boggs, 50, ENPH by pre 106, sell the week at 120, easy money. I always layer, is this the 10-minute trader account? So must be a new one. This is Instagram. Okay, Joe, you're on Instagram. That 10-minute trader on Instagram. Yeah, that's my account that's been there for a while. Don't ask me why. There's like the attendance here is minimal. Okay, but on TikTok, I have 2 channels. The 10-minute trader. That's the first one. Just started it this week. And the second one is Dividend Stock Talk. Now, be leery with Dividend Stock Talk because there's 27 other people pretending to be me. I find it very flattering that somebody thinks that my information is worthy enough to try to steal it from me and try to pass off trying to be me. All right, so anyway, Jeff, you think ENPH is good. ENPH. Enphase Energy. Interesting. $105, and you're saying buy pre 106, which is 105, sell this week at 120. What makes you so certain it's going to go up to 120? Okay, now anytime people say that, you know, take my advice, it's not going to be ENPH. All right. Jeff Boggs, terribly sorry, dude. there are no dividends in this selected time frame. So I'm going to ask you a question. If and when the stock goes down, and don't tell me it's not going to go down because that's all they do. As a matter of fact, let's take a look. Look, in January, 145. November, 75. That's a 50% drop in 3 months. Okay? 50% drop in 3 months. Then from 75, she jumps back up 100% increase in the end of December. Okay? And then from that, she drops back down to 95. So from 140 to 95, that's a huge drop again. Then she's back up, then she's back down. Back up, back down, back up, back down, back up. No, absolutely not. It doesn't have dividends, absolutely not. Sorry. Alright, I only like companies that have consistent increased dividends because when it dropped from here down to here, a 50% decrease, what did you collect? If it didn't have dividends, you collected absolutely nothing. And I only do dividend stocks because it's not if they go down, when they go down. When they go down, I wanted to be reassured that I'm getting higher and higher dividends every single year. Because it's not an if, it's a when. Okay? January, way here, way down here, 50% drop, 100% increase. What is that? 35, 40% drop, up, down, up, down. Yeah, no thanks. Too volatile for me. I like consistency. Safe, predictable, consistent. And dividends. Okay? I like dividends because if and when the world collapses, at least these companies are going to continue paying higher dividends. How can I say that? Well, we need toilet paper, we need pencils, we need erasers, we need tissue paper, dish soap, shampoo, gas for our cars, oil for our cars, wiper blades. You know, certain companies have been in business for over 100 years. Some companies have 50 years of increased dividends. Why would I put a company that has no dividends at all and lost 50% at the beginning of the year, and what is that, 3 months? And she shot up? Yeah, no, sorry. Sorry, dude, that's a no. Yeah, Joe Sullivan, that's correct. Spots Gone Carpet Cleaner, James. I sent you a DM with my number. I'll look forward to talking to you. Now, did you want me to call you tonight, or do you want me to talk to you tomorrow? Because I'm going to be up until like 1, 2 in the morning, and I am here Eastern Standard Time on the Eastern Seaboard. Okay? So let's keep on trucking. KG0444. Do you do technical analysis before jumping into a trade? Technical analysis. Let me think. Technical analysis. I'm not 100% sure what you mean by that. Okay, what I like to see, let me see if I get it right here. This might be good right there. Alright, here's my analysis. Alright, I look for a 30-day high. I like it to drop. I like 2 days to the upside on a 30-day bottom. 30-day top, 30-day bottom, 2 days to the upside. That's my indicator that the stock's going back up. That's about the extent of my indication. I look at a 1-year chart, a 90-day chart, a 30-day chart, and then seasonality chart. If all those work, after I figured out the numbers is over 1%, then I will jump in. But I'm always looking for the bottom and then for it to turn around to go to the upside. Because you're only going to make money in the stock market by buying low and selling high. Buying it at a high just doesn't work for me. Okay? See? Here's 30-day bottom, here's a new 30-day high. I don't buy way up here because you're waiting for it to go higher. No, I don't play that game. See, if I'm buying it down here, 2 days to the upside, I'm here, I'm taking this profit here. I'm only looking for 1% per week. Okay, you're under the impression that I'm looking for capital appreciation. Oh, hell no, I'm not looking for that at all. I'm looking for a safe, predictable, consistent 1% per week. It only takes me 10 or 15 minutes a day. 10 or 15 minutes a day is less than an hour a week. And an hour a week, let me show you something real quick before you lose interest. Go to The 10 Minute Trader, which is my website. If you want to do research on it, you can. You'll see that I've owned it for over 20 years. Down here, okay, current trades for 2024. Okay, account number 1, I'm up over 31% so far. We're week number 31, I'm up over 31%. Week number 2, I'm up over 69% so far for the year. So I average 1% per week on 10 or 15 minutes a day. That's it. So that's the extent of my technical analysis. Okay? Now let's keep on moving. Thanks. Hope the Debbie storm doesn't mess with you too much. Yeah, I hope so too. But we'll see what happens tomorrow. Makes life interesting. How would you buy Ford cover options? Sage, let's take a look at Ford. I think we already looked at Ford once. Now, here's Ford right here. Okay, I'm just going to jump to the meat and potatoes, all right? The last 30 days for Ford. Here we go. 30 days ago, it was at $12.91, all right? The 30-day high right there on the 18th, and that was $14.85. So, from $14.80, I didn't want to do that. I want to do this, and then I want to do that. All right, so we're looking at Ford. 30 days ago, we're at $12.88. The 30-day high was $14.85, and now we are currently sitting at $10.03. That's a $4 drop. $4 drop on a $10 stock is a 40% drop. So ask yourself a question. If you see a company, especially a company that's been in business for over 100 years, it's a worldwide known brand. We're not talking just the U.S. We're talking worldwide. Almost everybody knows who Ford is. Ford dropped 40% and a gap down. If you know anything about stock trading, you know that eventually this gap will fill. Eventually. Will it happen next week, the week after, week after? Don't know. But it will eventually. So at $10.03, if I buy it first thing Monday morning, I'm looking at 10.05 over 10.06. All right, so 10.06. So if I sell it for $10, right? If I buy it at $10.06 and I sell someone the rights through a covered call to buy it from me at 10, well, they're going to pay me 17 cents a share. Now, 17 cents a share is not a huge number. But here's the thing. I'm losing 6 cents right off the top. Okay, 10.06, selling it for 10. Currently at 17-cent profit. You take the 6 cents off there, so I'm only walking away with 11 cents. 11 cents does not sound like a lot of money, but here's the thing. 11 cents is over 1% of a $10 stock. Okay, so you're getting your 1%. It's at an extreme bottom. It just dropped 40%. We're talking about Ford here. Okay, this company's been around for over 100 years. We've seen World War I, World War II, Korea, Vietnam, the Great Depression, stock market crash, the pandemic, the financial crisis, the oil embargo. We've seen all the crap over the last 100 years, and the company is still going. Matter of fact, they're going so well that they didn't take any bailout money from the U.S. government. Okay, a lot of people took bailout money. Ford said, no, we're good. You got to respect that. And you ask yourself, do I like Ford? Do I like Ford at $10? Well, I like Ford at $10. I think I do have some Ford. Hold that thought. Yep, I got Ford right here in this account. And I got Ford over here in this account. Do I have any Ford in this account? Hold on. Nope, no Ford in this account. All right, so that being said, I like Ford. Okay, so let's keep on rolling. KGO, never mind, you are doing it right now. Alrighty, KGO. KGO, alright. Foolishness, cool beans, interesting name. Kevin, Intel has bad stuff going on. I'm sure it does. User 8798, you like Taiwan, whatever you call it, semiconductors. Sheila, thanks for sharing the live slot. 65 people. What's on your list this week? Bookies budgets this week. Oh, this week. What do we have on our list this week? Let's get out of here. Now, we are in 8/3, which is that's June, July, August. All right, here's August 3rd, Saturday, next week. Okay, Citigroup, Ford, Intel, British Petroleum, IBM, Siri, Visa, and Wells Fargo. Nice. That's what's coming up this week. They're paying dividends this coming up week. Okay, I got a couple more questions. Cool beans. Look at all those gifts I got. That's so nice of you. Thank you, thank you. All right. UNH, dog lover. UNH, never heard of it. Trade. UNH. United Health Group. Yeah, no. Let me tell you why it's a no. I don't do stocks over 250 bucks. So I'm glad. Okay, who was that? Dog lover. I'm glad that I appear to be someone who can afford, 1,000 shares at $5.89. Okay, that's $500,000. Sorry, I'm glad you think I got that. No, I don't. Not to put into one position. Sorry. Apple. Ooh, someone wants to take a look at Apple. Okay, here's Apple. 219.28. The 220s are going for 385. Whoa, that's over 1%. Cool beans. Okay, high, low, or is it? Blah, blah, blah. Okay, the high was a couple of weeks ago, 237.54. The bottom was a couple of months ago, 164. Last year, she was at 191. Okay. I'm just going to jump right to the last 30 days because that's going to be the most important part we like. All right, so 30 days ago, we opened up at 220. All right, a week and a half later, we got our high at 237. Hit 237. From 220 to 237, that's a $17 increase. Nice, like it. Me, I'd take that profit. Okay, did 30-day bottom right here on the 25th at 214. Well, now she's going to the upside. Okay, 30-day top, 30-day bottom. Now she should be going up. Okay, what you're gonna like this. You ready? Watch this. You're gonna like this stuff. We're gonna take a look at the seasonality chart for Apple. Take a look. January 1st, December 31st. What does it do all year long? It goes a nice, steady upward trend all year long. Okay, great company to jump in and just consistently go up all year long. Okay, the blue line's up there. That's where we are right now. So what do we expect for the next couple of weeks? Well, I'm going to tell you it's going to go up. All right, look. It goes to the upside. All right, Chris Martin. We looked at Ford 3 times tonight. I'm not going to look at it again. Sorry. Down 9% Ford since you jumped in. Since I jumped in. Hold on a second. All right. Okay. I jumped in at Ford at 10.99. Okay. Okay, so it's currently at 10.28. Well, you're right. It is down a little bit from what I jumped in. I jumped in at 10.99. Okay, so I don't know what you're talking about. Okay, 10.99. The 11s are going for 2 cents. Ah, that's horrible. Anyway, is what it is. So, okay, let's go back to where we were. Oh, Bruno, KRC. Oh, wow, KRC. Bruno, I never heard of KRC. You know what happens if it's a stock I've never heard of? It's a no. Okay, monthly options. Monthly options means I can only do it once a month. Once a month means 12 times a year. 12 times a year is a hell of a lot less than 52 times a year. That's why I don't do monthlies. This is a monthly, see? August, September, November, January, February. Monthly. No, 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 not for me. If you like it, more power to you. I just don't do it. I don't want to waste my time with it. Okay, I like weekly cash flow, and you can't get weekly cash flow with a monthly dividend, with a monthly optionable stock. Chris Martin, hey, you got 16 cents though. Okay, could be 8 by September. Okay, I'm assuming you're still talking about Ford. Yeah, it could be 8 by September. Because I recall, I think it was in 08, she dropped all the way down to $3. We're talking about Ford. Okay? I like Ford, and I continue buying Ford. KRC, Bruno, we already looked at that. That's a no. Did you already look at PBI? Sheila? PBI. Pitney Bowles. Okay. Now, Pitney Bowles, it doesn't sound familiar. I mean, it does. I know who the company is. PBI. Yeah. That's going to be a no, Sheila. Look at the dividends. 2029, 97, 30 to 31 to 32 to 33 to 36 to 37 to 38. And then in 2013, they went from 38, they cut them in half. And then from 2013 to 2018, that's 5 years, they didn't increase at all. And then in 2019, they went from 19 cents a share down to 5 cents a share in 2019. And then they haven't increased them since. So Sheila, as much as I'd like to say, yes, honey, it's a good trade, I personally wouldn't do it because the dividends kept going down and down and down and down. When they stop sharing their profits or the profits don't increase, that's a no for me. Well, look at that. We're 11:15. We ain't got much further to go. All right. Ford is 10.03 a share. Yep, I know that. Bruno. Okay. Holy cow. I'm like, nope, I'm not done. KRC. Yep. Does a monthly become weekly once a month? No. Monthly means that the option expires the third. Hold on. All right. When you're talking about the difference between a weekly optionable stock and a monthly optionable stock, well, weekly is pretty plain and simple. The options expire every Saturday. Every Saturday. Okay? Now, you can't trade on Saturday, so they say it expires on Friday at 4 o'clock. Well, here's the thing. Monthly optionable stocks expire the third Saturday of every month, or the third Friday, however you want to look at it. So monthly optional stocks, you can only do an option once per month. That's 12 times a year. Weekly optional stocks, you can do it every single week of the year. That's 52 times. Now, I average 1% per week. That's 52% per year. Monthlies, I just don't do, because I used to do monthlies years ago before I moved to weeklies. Because I didn't know anything about, because they introduced weeklies, I don't even remember when they introduced them. But when I first saw them, I said, oh, hell no, that's risky. But as I got more comfortable with them, it's like, I mean, I can get 1% every single week? Hell yeah. So that's what I do now, 1% every single week. James, what are my thoughts on AA? I'm currently down $8 on it. Hey, Secretariat, how are you? Let's check it out. AA. That's Alcoa, right? Alcoa. AA. Alcoa. Ooh, interesting. Okay, 29.47. What's that at the current moment? The 29.50s are going for 86. That's well over 2%. Let's take a look at the numbers. A year ago, 34.23, bottomed out at 22.88, and that was back at the end of October. Okay, got a double top at 45.29, and then she just drops to where we are currently. So, where are we? All right, last 30 days. Here we go. 30 days ago was our 30-day high. Check it out. 30 days ago, 30-day high, Friday, the 30-day bottom. What does that tell you? Well, that tells me to keep my eye on it because we don't know if this is the bottom. Monday, it could go lower. Monday, it could go higher. It's a 50-50 bet. 29.47 was the last trade. The bid, 29.40. The ask, 29.47. Doesn't really give us any clues of what's going to happen on Monday. But I am going to write it down to keep my eye on it during the week. Is it on there? Nope. It's not on my list, but it is now. All right, so Secretary, it's on the list for the week to keep our eye on it, because as soon as it finds the bottom, I want to see what the premium is going to be. At this current moment in time, the premium is more than 2%. If it's more than 2%, hey, I'm all for it. Let's find out exactly what it is. Okay, let's clear this out of there. The 29.50 is going for 86 cents a share. 86 cents a share, and if I buy it at 29.47, that gives me a grand total of 2.9%. I like 2.9%. I like Alcoa. Alcoa has been in business for over 100 years. They are a dividend king, which means they've increased their dividends for more than 5 decades. All right, let's go to more questions. I got PBI from one of the list of the contenders. Yeah, well, it's contenders, okay. So I didn't even check it. Okay. And I saw that 8% premium. Yeah, the 8% premium has a tendency to make you think twice. I was like, oh, that looks awesome. You know what I mean? Because don't let Sheila, because, I fell prey to it 2 weeks ago with Chipotle. 4% trade. Yep, it looked delightful. But then the stock dropped and dropped and dropped. Next week I got 2%. I got out. And, I did make money on the long run, so it is what it is. We're at 18. We got a couple more minutes left. Is there anything we haven't looked at yet? NEE. Yes. Somebody said something about NEE. We'll take a gander at that. NEE. Here we go. Nextera Energy. Yeah, it's going to be a no. Damn it. The only reason. All right. I'm not going to say no. I'm going to say not this week. Now, I did buy NEE last week, and I did jump out of it last week in a different account. Coinbase. Sorry, Oscar. I don't do cryptocurrency. Nope, no cryptocurrency at all. Coinbase doesn't have 20 years of increased dividends. Coinbase is not something I look at. Sorry. Okay. So, Nextera, check out where it was. 30 days ago was a 30-day bottom. Now we're at the 30-day top. What do you think is going to happen next? Well, of course. Now, I'm going to put NEE down in my little book, not for next week, not for the week after, but 2 weeks, because I want to give it plenty of time for it to drop. All right, I'm going to put it with IBM and Baxter, because remember, we're going to take a look at IBM and Baxter in 2 weeks. Okay? Because if you look where the high is, okay, the high is right up here, right? The 30-day bottom is way down here. Went up, down, up, down, up, down, up. Where do you think it's going to go next? It's coming down. Okay, and I want to give it plenty of time for it to move. All right. Chris Schneider, what about BEPC? Holy cow. Okay. I've never heard of it. You're new here, so I really can't pick on you yet. But if I've never heard of it, it's going to be a no. BEPC. Brookfield Review. Oh, no. Brookfield Renew. Yeah. Sorry, dude. That's going to be a no. The reason why it's a no, it's a monthly optionable stock. Means I can only do a covered call once a month. That's 12 times a year. Doesn't compare with 52 times a year. Because if I'm getting 1 or 2% here, right, that's only 12 to 24% a year. If I'm getting 1 or 2% a year, and 1 or 2% per week on the weekly options, well, that's 50 to 100% a year. You tell me which is better, 24% or 50%. Okay, I'm not even going to let you answer that question because we all know what it is. All right, so it's 11:21. You guys ran out of stuff for me to look at. So we could call it quits for the, for the day. Right, here we are, right here. Oh, you know what we haven't looked at today? Walgreens. Okay, why haven't you guys mentioned anything about Walgreens today? Let's take a gander at it. Okay, Trey, that's a good question. No. Trey has the question. When you sell a covered call, do you sell it in the money only? No. Okay? Now, Trey, I'm going to tell you what I tell a lot of people. Now, you're going to hear me saying certain phrases over and over and over again. Now, the phrase you have coming up right now is, it's all about the numbers. Okay, so let's take a look at one of my favorites. 1609 Macy's. Right now, the 16 is going for 43 cents. No, it's going for 31 cents, which is just under 2%. Now, in the money, the 1550 is going for 52 cents. Okay, but at 1609, I'm losing 59 cents. Once you take 59 cents off of that 1550, it's not worth it. So in the money, the 1550, okay, see the 1550 is going for 52 cents. All right, that's in the money, right? At 1609, the 50, yeah, no, it's not worth it. So one strike out of the money, the 16. That's where the sweet spot is for that one. What about Walgreens? Hey, Rich, let's take a look at Walgreens. Walgreens is one of my favorites this year. Look, we're down to 55. I got no problem whatsoever jumping ship early on this thing. WBA. That's weird because on Friday night we got over 200 people. Now we're down to 55. That's crazy. Okay, so here's Walgreens. Now, Walgreens, for some of you, don't like Walgreens. Me, I love Walgreens. Why? Well, Walgreens is over 7,500 different stores. 7,800, I think it was. Or was it 8,600? Anyway, they got a shitload of stores. They do. There's a every major city has a Walgreens. Okay, every city has a Walgreens, Walmart, and CVS. Big three drug dealers. Okay, when I mean drug dealers, I mean prescription drugs. Okay, that's where you're going to get it. CVS, Walgreens, or Walmart. Yeah, I know it's a Saturday night. Friday night we had 3 times the amount of people. So anyway, here's the thing. We've been waiting for Walgreens to find the bottom, and they finally found it on the 9th of July after a 7-year downward trend. 7 years going down, and we finally found it on the 19th. All right. But look where it is now. Okay? She went up, she came down, she went up, now she's coming down. She's probably going to come down somewhere on 11, 1080, somewhere in that area before she goes back up again. It's Walgreens. You either like it or you don't. Now, I like Walgreens because it's giving me a lot of money this year. I've been trading it since the beginning of January. I buy it, I sell it. I buy it, I sell it. I buy it, I sell it. I'm not looking for big, huge run-ups. I'm not. Okay? She comes down, there's the bottom, 1, 2 days to the upside, then I jump in. Get my little 1%, great, now I'm out. She comes back down again, bottom, 1, 2 days to the upside, I jump in, take it up, get my profit, I'm out. Now she's coming back down again, I'll wait to find the bottom again. Because you find the bottom, see, 2 days to the upside, then I jump in. So when it comes down here, I wait 2 days to the upside, then I jump in. So Walgreens most likely will do that next week or the week after. All right? Josh, dude, you just got here and I'm just getting ready to leave. Okay, now Josh, on Instagram, I'm here from 9 p.m. until 11:30. And it is 11:25. I'm getting ready to sign out. So you just got here. I can't really help you out too much with what's going on. All right. All that being said, you guys have anything else you want to take a look at? Or we can just call it a day now. Because that works for me. All right. No more questions? Great. We're going to call it a night. It is a Saturday night. I'm tired. I can go for some rest. You guys have a wonderful night. I'm out of here. What about NIO? Oh, hell no to NIO. Really? NIO? Okay, it's at $4.05. Okay? Now, let's go over here to Yahoo Finance to see just how many dividends NIO has. And look at that. NIO has absolutely no dividends whatsoever. So NIO is a big fat no. Alrighty, so terribly sorry about that. Coming in late, asking for NIO. So good night, everyone, and I'll see you again tomorrow. Finish up on Facebook. You guys are done. Cool beans. Instagram. You guys have a great night. See you again tomorrow. TikTok. Guys have a great night. See you again tomorrow. And now YouTube. See you later. Done. And done there. Okay, you guys down here, I will see you again tomorrow night. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks, weekly cash flow, take you along for a ride that's safe, predictable, consistent, 1% per week. Have a great night, you guys.